Canadian Mortgage Weekly. We're here with episode 47 for you all. My name is Sam Thompson, and this morning I'm joined by Joe Bladek. How are you doing this morning, Joe?
Hey, Sam, not too bad. Thanks for introducing me there. And yeah, not doing too bad. The weather is still good out there. It's not snowing yet. And
That's
the
right.
world is filled with mortgage news today. So really excited to share this all with all our committed viewers today and our new viewers today. How are you doing today, Sam?
Yeah, I'm doing good. Again, I'm definitely enjoying the weather here in Barrie. The last few days have almost felt like late summer. So it's nice to have that before the imminent snow. I know that Halloween is notorious for bad weather, so we'll see what the weekend has in store. But yeah, you're right. It has been a crazy week for mortgage news. It's been very packed. If anybody caught, yesterday's special Canadian Mortgage Weekly rate announcement video, you'll know that there was some buzz around the overnight rate and the variable rates, and there's been a lot of news, coming into this week.
You bet there has, yes. The rate announcement came a little bit as a surprise to a lot of folks out there because we were really anticipating that the Bank of Canada may take a different direction with the recent employment numbers and how the COVID has been trending down, and the market's just been doing really well. So it was nice to see that the Bank of Canada decided to maintain its rate, and it's really also released some news as to where it thinks the economy will go for Canada in the next 3-4 quarters and 2-3 years, which I'm really excited to share about as well.
Yeah, absolutely. With the rate staying steady, anybody that has a variable rate is even more excited because, as you know, the last few weeks we've been seeing fixed rate rise. So I'm sure that there was a number of people that were still considering variable or had locked in with a variable rate that weren't really sure. But yeah, as you were saying, they had an interesting note where I know earlier in the year they were predicting the variable rate begin to rise maybe in the middle of 2022 would kind of be the start of that incline. But I think on their report yesterday, it's looking like they're pushing that schedule up a bit, and it could hit, April, June of next year. So a bit further on target, which again matches, what we're seeing with the economy, starting to reestablish itself better.
You bet. Yes, exactly. The economy is starting to establish itself a lot better. And that schedule of it being moved up now, it's going to affect a lot of folks in variable rates and home equity lines of credit. So if you are in that sort of product, it'll be a good time to start looking at reviewing your mortgage just to see, if you would benefit from locking in. But what we're seeing a lot right now, because the variable and fixed have had a pretty big spread, like the discount to go variable is very deep right now. Just even if rates did go up a quarter point, Sam, I wouldn't see really any effect. And also the increase would still keep that variable rate much lower than what fixed rates are at right now.
Yeah, absolutely. As much as it can cause a panic, or maybe you're
Yeah.
unsure of, variable rates rising, the amount that we would see it rise, again, you're saying that gap has only grown in the last number of weeks. So even if it does rise, you're likely still going to have the better and preferred rate at a variable rate.
hmm Yeah, it's so preferred actually, Sam. Now that you mention it, we have here stats saying that as of this year, Canadians, it's about a third of Canadians that are actually opting to take the risk and choose the variable rate and go with that type of mortgage, which has been very high compared to previous years.
Yeah, that's right. It always seemed like variable was um, maybe a less sought after option. People liked the security of a fixed rate. Even though, statistically you'll pay less on a variable rate. It is wild to see, and I mean, the indications are all there when you look at how different today's variable rate is versus looking at the 5-year fixed. It really does speak to that third of Canadians. But that, yeah, as you're saying, is a huge increase compared to previous years where fixed rate was really the dominant interest rate choice for a lot of Canadians.
Yes, exactly. And, it might continue to trend that way over the next few months because what we are seeing, as you know, Sam, we reported here on Canadian Mortgage Weekly Live, I think 3 or 4 episodes ago, that the bond yields started to rise and that we would see fixed rates rise, and they have since then. And we've seen, you know, that widespread across lenders across the market. And one of the interesting notes that came out of the monetary policy report yesterday was that the Bank of Canada will be ending its $5 billion quantitative easing program, and where it has been purchasing up $5 billion, a week worth of bond yields. So
Mhm,
that's going to put upward pressure on yields, which would actually push interest costs for fixed rates higher.
mhm.
So that will be interesting to watch over the next few months as that program
Yeah.
ends, and to watch actually that spread between variable and fixed potentially increase even further.
Yeah, I know that that has been definitely a big buzz, coming into this week with, a rate hike, or sorry, a rate hike expected. But I know
Yes.
that a lot of people have, been keeping a pulse on, what the rates are doing. They're starting to see it rise, looking into it a bit more. Um, yeah.
Yeah. Well, just to give everyone an update here on Canadian Mortgage Weekly Live at some of the stats here that we're looking at, as fixed rates are climbing right now, we just wanted to report some numbers for inflationary numbers in Canada, and
Mhm.
and just how that will actually tie in with the market right now. And Sam, as you know, the inflation rate in Canada right now is sitting at around 4.4%.
Mhm.
It's pretty high compared to previous years, but that is solely based on a basket of food groups, which is 3.9%, shelter, which is 4.8%, and the big one here is fuel, gasoline, which is 33% right now.
Mhm.
We're seeing that at the pumps. I made a comment to you yesterday. I went to go fill up my car, and it's half a tank costs as much almost as a full tank right now did
Yeah.
a few years ago.
Yeah, I mean, we're definitely not seeing the first summer of COVID back in 2020 when gas prices were, quite well under $1. We're seeing those rates definitely climbing back up in the cost. Mhm.
Yeah, yeah. So with that growing gap and more Canadians taking variable rates, as we see those fixed rates climb, we want to recommend that if you are looking to refinance or if you're
Mhm.
coming up to a renewal point in your mortgage, that at this time it would be a great recommendation for you to talk to your mortgage professional that either set up your original mortgage, or if you want, you can give us a call, Sam or myself or Terry Lynn, to get started on a mortgage renewal or refinance process, just to see where you're standing at with the numbers. We're seeing, as Sam and I have done multiple times in the past, we've presented that refinancing at these lower rates can actually save you some money, even with a penalty involved.
Mhm.
Yeah. Yeah. As we continue on and end this episode, I just wanted to take a moment and introduce Sam Thompson. Sam Thompson is a mortgage agent with Mega Mortgage. He's been with Mega Mortgage now for just over a year and a half and a little bit now. Moved from Ottawa, Ontario originally, lives in Barrie with his wife, Grace. Sam, it's great to have you today on the show. Thank you for all the commentary today about these inflationary figures and what's happening with the mortgage bond yields and all that. Your information is very valuable for this episode.
Oh, thank you, Joe. And yeah, it's always, I'm happy to be here to chat with you about, again, a lot of these topics are very newsworthy, and we're hearing it from clients first, and from seeing the articles firsthand. So it's always, a pleasure to be on here, making sure that everybody is informed. And again, if anybody doesn't know you yet, Joe Bladdock is a mortgage broker, again in the Barrie Simcoe area, living up in Aurelia with his family. I think you've got me beat for years in the industry, Joe, as you've been in the industry for over 10 years. So again, right back at you, in terms of, the knowledge and insight that you bring, because, it's not your first time around the block looking at rates and inflations and bond yields. So Yeah, again, thanks for having me on today's episode.
Oh, absolutely, Sam. And it's always great to get this information out to all our viewers.
Mhm.
If you watch Canadian Mortgage Weekly and have any tips or any items you would like us to talk about on our show, drop us a comment or send us a private message if you would like to chat with us about your mortgage renewal or mortgage refinance, or if variable rates or fixed rates are right for you, give us a shout as well. And thanks for watching Canadian Mortgage Weekly, Canada's only video mortgage news podcast in Canada. And we look forward to seeing you next week on Thursday for episode 48.